Ray Dalio is the founder of the largest hedge fund in the world, Bridgewater Associates. He is known for his macroeconomic expertise and as the pioneer of risky parity investing, an investment strategy that focuses on diversify according to risk rather than asset class. Ray Dalio is the true genius inside and outside of the investment world, and his insight on the stock market, equities, bonds, cash, and gold is unlike anyone else in the mainstream financial media. Recently, Ray Dalio was talking about the current state of the economy and what is to come ahead. He said that the dollar's role as the global reserve currency is at risk. He explained the different types of monetary policies used in the past, present, and what will likely be done in the near future. He then shares his opinion on the markets and provides investors with some ideas for investing in the coming months and years. Ray Dalio says that we have seen throughout history, money and debt has been created repeatedly to get buying power, and that has been produced by central banks. Those print that money because they cannot finance it any other way. So when the money is created, they provide that money to people on debt, and that's how the debt is created. Now that money and debt give buying power to the banks, and that dynamic of creating money and debt to get the buying power is a big concern. There is a lot of money in rotation, but the wave of financial assets like bonds and debt can give buying power. Means you can sell them to buy goods and services, but the amount that exists out there that are claims is far greater than what would be allowed to happen. Though this situation provides liquidity to some of these things to happen, but the things that are happening here, other than being reflective of the liquidity, are really just a part of the bigger coming problem. There are not enough financial resources and money to go around. So there is a need for that kind of spending and the actions that have been taken so far in terms of that kind of stimulus. But it's a big mistake to believe that the lower interest rates and the debt service payments are the only consideration, because all those bonds and debt is converted into a bond and has to be sold to buyers who find it attractive enough to own it. These interest rates are minus 1% in inflation adjusted terms and about 1% in the actual terms. They build a pile of these debts that the bondholders believe that they can turn into the buying power by selling the bonds and making that purchase. When you have a lot of claims of assets that are not providing a good return and you have the world own too many of them, it's not probably going to be able to bought by those. That means the Federal Reserve will have to make up a gap, a funding gap. The upshot of this is that it is in cycles. That has happened throughout the history, and that pattern is not a good pattern of finance. It risks the dollar, the possibility that bonds won't be a good storehold of the wealth. So one should delude oneself into believing that because interest rates are low, that's not a problem. One of the most important things to consider too is that money that's going to be expanded also going to be productive in terms of producing goods and services and so on. Dalio say, debt is money. When you produce debt, it's an obligation when you are holding a bond to deliver money and you have to produce money. And we are producing a lot of it. Ray Dalio adds up, if you add the holdings in the world of bonds and who is holding them, they are overweighted in bonds and therefore overweighted in dollars and dollar assets. And we are going to try to sell a lot more. That has created a risk for the dollar. The dollar is down about 10% since the action has taken place. Ray Dalio shows his concern that it's important because if you lose your reserve currency status, you lose your exorbitant privilege to get money or borrow it when you need it. So it's a high risk. That money could go into an alternative currency or it can go into alternative assets. Traditionally, old devaluations drive money into stocks, golds and the other assets. So you don't just have to go to other currency in order to escape the bonds. You see devaluation of the dollar in relationship to all financial assets, but it's also coming at a time When China is also opening up its financial markets, the world is underweighted in its financial markets. It's a valuable economic alternative and competitor. It's developing more capital markets. China is now the largest country in terms of world trade. Its import and exports are the largest in the world, and yet virtually none of its transactions are done in their currency. So they will naturally increasingly be the internationalization, and it will represent an alternative. And that's why then we have issues of capital wars. Sometimes we think that if we get a good leader like the President of the United States or the Treasury Secretary, they can deal with the issues and bring about a good result. There are sometimes circumstances that they find themselves in, which the United States is largely in. It spends more than it earns, and it finances it with debt by a lot, and it sells those bonds. The situation ahead of us is politically challenging. There are three big factors. The first is the financial dynamic. The second is the polarity that exists in wealth, values, and politics, which is extreme. The class warfare, the actual willingness and eagerness almost to inflict harm on the other side, and the absence of reasonableness is at its greatest extreme. Something like that was last seen way back in the 1900s. And then we have the rising of the great power China to challenge an existing great power. Those three factors, let me repeat them: the financial factor, the wealth gap, the political factor, and the rising of a great power. The last time those things happened were in the 1930s. If you look at history going back in periods of time before that, you could see these patterns in the history. Those are the circumstances that we are currently facing. So the issue is, can we face those things in a skillful way and a bipartisan way so that we don't do ourselves even more harm than the circumstances have brought us as a challenge? So guys, I would like to end this video here. Let me know in the comment section below. Do you agree with Ray Dalio's thoughts? What are your views on this? And if you found this video informative, then please make sure to like this video and subscribe to our channel so that you can get future notifications for our such videos. I'll see you in my next video. Till then, have a nice day.